Good afternoon, traders. This is Tony D from easyMarkets in Sydney. A big day ahead of us. We've got Super Thursday coming through from the UK. This is where you have the Bank of England announcement, along with a lot of the bank's forecasts all coming out at the same time. And if you're looking at the pound at the moment, we're right at the bottom where we've been in the last few weeks. So it's fallen all the way down to 135. Tested that a few times. Started to moderate overnight. And so it's a bit more evenly poised going into this event. But the bar for the Bank of England to come out more dovish than the market is quite high, so there is a chance there of something being misconstrued as positive, and you're seeing the market take profit and squeeze back towards that 137 level is on the cards at some point, even without the Bank of England. So it could be the catalyst that we're waiting for. More important than the Bank of England for the general markets is the US CPI, though. Forecast to rebound strongly after last month's shock negative number. It's forecast to come in at 0.3. Anything lower than that is going to be damaging for the US dollar, which has been at almost the apex of its strength at the moment. So it's it does have room to pull back, and just needs a catalyst. So given the price action we've seen so far this week, you know, some sort of weak CPI would definitely do that. A strong CPI would keep the US dollar on the front foot, and we're going to have to wait then for a reason to take profit. But at the moment, those looking to sell the euro and the pound and waiting for a rally to get into, or, you know, and the same with the Aussie dollar, you might have to you'll wait 1 or 2 more days if that CPI number is as expected. But if it isn't, then you might get a chance in the next 24-48 hours to get those levels you've been waiting for to get into this US dollar trend. Dollar index, if you're looking at there, it's been struggling at the 93 level and having a little pause here. So even if we are going higher, it's natural to have some sort of pullback even in an uptrend, and that's the thing we haven't had yet. So we'll see how that plays out in the next 24-48 hours. For those of you involved in the US dollar, those who are playing the crosses, the main cross that we look at here in this this update, these videos, is the Aussie Kiwi. Now, ever since that 105 test, we've seen the Aussie been grinding higher, and we just got a catalyst to move up even further with RBNZ. And the new governor over there coming out, pretty much being as jawbony as the old governor. So Governor Orr is the new governor, and he's come out saying that the market's getting the memo that the you know, the Kiwi should be lower, and now it's lower. He seems to be encouraging that, and also he did sort of put a little cheeky line there in his statement saying that the next move is evenly balanced between a rate hike or a rate cut, and they're not sure which. And even though, you know, the market's pretty much pricing in a rate hike next year, they are, by opening their door to a rate cut, talking openly about it, that's enough to get the market selling the Kiwi. And the Kiwi is one of those pairs which does overshoot and is easily pushed around. So you are seeing the Kiwi, the weakest currency in the market for the last couple of weeks, and is really overextended, but is definitely you know, definitely getting quickly towards the major supports for 2017, which is at 68 level, and we can look at that in the next couple of days or next couple of weeks for those who are looking for longer term entry points. Alright guys, we'll be back tomorrow to see what the action is for today. This is the biggest day though in the market for the week, so it is the best time to be trading and setting up your positions.